The Consumer Federation of America recently released a report on homeowners insurance premiums entitled Overburdened: The Dramatic Increase in Homeowners Insurance Premiums and Its Impacts on American Homeowners. This report came on my radar through a LinkedIn post from a prominent policyholder attorney who praised the CFA for their research and insight.
You did a good job, Jack.
The report is a fascinating 29-page read filled with facts and figures, maps and graphs outlining the extent of homeowners insurance premium increases from 2021 through 2024. It's filled with loads of fun, bullet-pointed facts like this. Insurance companies increased premiums in 95% of US zip codes. From 2021 to 2024, annual insurance premiums for a typical homeowner increased by an average of $648 across the country. American homeowners of single-family homes collectively paid an estimated $21 billion more in premiums in 2024 than in 2021. Now, I'm not disputing any of these statistics.
I'm not gonna do that.
They're likely all very much true. My own personal homeowners insurance premium experience fits neatly into this national average, having increased by just under $600 since 2021. And you know what? I don't love that.
I really don't.
I'd much rather have spent that $600 on something more fun than insurance, like maybe some new bling.
Now that'd be real nice.
So yes, insurance companies increased homeowners premiums in 95% of zip codes from 2021 to 2024. But is this actually shocking?
No, not really.
Should this really surprise us?
Well, I don't see why.
Is there any industry that's not significantly increased prices in 100% of zip codes over the past 3 to 4 years?
I got nothing.
According to the US Bureau of Labor and Statistics, the average household spent $1,200 more per year on groceries in 2024 than they did in 2021. If my math is correct, that's twice the increase of my home insurance in the same time frame, just for essentials like milk and bread and eggs. The cost of utilities for US households has increased by $550 per year from 2021 to 2024. And the household cost of transportation has increased by $1,560 per year in the same time frame. And the list goes on. So what's the point? Well, it's simply this. Homeowners insurance, really any insurance for that matter, doesn't operate in an economic vacuum.
Wow!
And while the nature of the business of insurance is unique in many ways, it's still a business just like tens of millions of other businesses around the country, with business owners perpetually analyzing their cost of goods sold. And when the cost of doing business rises, so must the price of your product, or you'll go out of business.
Nobody wins.
Just because home insurance doesn't come in a gallon jug, in other words, it's not really a physical, tangible product you can hold in your hands beyond a stack of confusing policy documents, that doesn't mean it's insulated and isolated from broader nationwide economic realities. So let's get back to the overburdened report. After 17 pages of facts and figures and tables and graphs outlining the premium burden on consumers, we finally get to conclusions and recommendations. And you know what? I don't disagree with many of them. Risk mitigation and property resiliency have never been more important and will absolutely be crucial for future availability and affordability of property insurance. But the last conclusion and recommendation in the list, yeah, this one gets me. It says, strengthen regulatory oversight of rates and underwriting practices. The reality is that insurance is already at the top of the list next to healthcare when it comes to the most highly regulated industries in the nation.
He's not wrong.
I found this recommendation for stronger regulation quite fascinating, as I've spent quite a bit of time as of late looking at the current regulatory oversight of insurance rates in states like, say, California. How about an example? In 2024, one of the state's largest property insurers requested permission from the State Department of Insurance to raise their homeowners insurance rates. The regulatory process to get that rate increase approved took 7 months and 12,746 pages of communication and documentation between the insurance carrier and state regulators. Do you know what 12,746 pages looks like? That's a lot of paper. 12,000 pages.
You're a regulation hottie.
7 months and 12,000 pages to get permission to raise the price of your product. And you're telling me we need stronger regulatory oversight?